Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Well, on to a big development from the telecom space. The telecom regulator has finalized its recommendations for spectrum pricing for the next round of auctions. And in what could be as in fact a major relief to the industry, the TRAI has suggested that the reserve price of the 700 MHz band should be equal to 2 times of the reserve price of the 1800 MHz band. This has resulted in a 42% reduction in the price of the band. Remember, earlier the government had fixed the base price of this band at 4 times that of the 1800 MHz band.
Okay, well, on to some earnings expected today. ONGC will be reporting its Q1 numbers from the oil and gas space. Sonal is here with the key expectations. Sonal, morning.
Good morning, Ekta. Well, we are expecting a strong set of numbers from ONGC this time around, and that is because the realizations are expected to be at the record high levels. Also, that is because the average Brent crude price was up 48% on a YOY basis and 11% sequentially. So, if I talk about the numbers, the revenues are expected to go up by around 12%. The EBITDA, that is expected to go up by around 27%. Operating profit margins are expected to expand by around 630 basis points, and all that leading to a profit increase of around 11%. What are the major things that we'll be watching out for? The average crude realizations will be the biggest number that are expected to be at record levels at $73.6 per barrel. Even gas realization are expected to improve sequentially as well as on a YOY basis at $3.4 million BTUs. BTUs is British thermal units. Most of the brokerages have not factored in subsidy burden for the company this time around. However, Kotak expects a subsidy burden of around 4,460 crores. So that is another number that we'll be closely watching out for. Overall, the total crude sales are expected to decline by 3% on a YOY basis and remain flattish on a sequential basis. However, total gas sales, there we'll see some sort of growth, and that are expected to increase 3% on a YOY basis and 3% sequentially. So these are the basic numbers that we'll be watching out for today.
Okay, all right. Thanks so much for that, Sonal. Well, from Sonal, let's hop across to Mangalam. He is standing by. He is going to tell us what do we expect from Marico's numbers. Hey, Mangalam, good morning.
Good morning, Nigel. Definitely not British thermal units from Marico, so you watch out for a lot of the volume growth that they do in terms of their oil business. And this time it's the parachute oil, nothing to do with the ONGC oil. Marico, like all FMCG companies, also ahead of its numbers at a record high, not trading particularly cheap, 43 times FY20 earnings. We're expecting a revenue growth of about 18%. Margins are likely to come off, and that's because copra prices, the input prices, have risen sharply. So margins are likely to come off by about 100 basis points. 18.5% is what we're expecting. On the back of that, after an 18% top line growth, 12% bottom line growth is what our poll throws in. 10 to 12% is the volume growth. So that means 18% revenue growth would comprise of close to 6% pricing growth as well. Margins make reduce. I've spoken about that. Individual products, just watch out for about 10 to 13% growth coming by in Parachute, which accounts for about 35-36% of India's sale. Value-added air oils, which accounts for a quarter of their revenues, expected to grow anywhere between 15 to 20%. For Marico, the pain point is Saffola. That business is very muted, so expect just about 8 to 10% growth out there. And a very small part of their portfolio, which is the youth products portfolio, expected to show good growth of close to around 6 to 8% on a high base. International business, which accounts for 20% of their business, should grow by about 6 to 8%. Weakness in Vietnam will offset the strength that the company is seeing in Bangladesh.
Okay, and what about Pidilite?
Well, Pidilite Ekta numbers were absolutely in line with our expectations. The revenues in upwards of 1,800 crores, just marginally above our estimates of around that 1,800 crore mark. EBITDA at 382 crores, absolutely in line with what we were working with. And the net profit, though, that came in 20 crores below our expectations. That's primarily because the company's effective tax rate increased a little bit and the other income came off by about 10 odd crores. So those things, if you put all of that into perspective, looks like numbers are pretty much in line. The consumer business did fairly well. So the volume growth of 18% that the company posted, again, in line with our expectations of 18 to 20%. Out there, the consumer products division showed a volume growth of 20% and the margins too expanded out there. However, the industrial business showed a volume growth of just about 7%. So that is something we'll have to wait by for management commentary on how that product or how that division is likely to pan out. No problems as far as the other businesses are concerned.
Okay, all right, Mangalam. Thanks so much for that. Well, let's hop across to Abhishek. He's standing by. He's going to tell us what to expect from India Bulls Housing Finance. Hi Abhishek, good morning.
Good morning, Nigel. So loan growth above 30 to 35% will be positive. Last quarter, the loan growth was at 34% plus. The spreads, that is the difference between the yields on loan book and the cost of funds, around 3 to 3.25 will be positive, or about 3.1 will be positive. Last quarter, it was at multi-quarter low of 3.11%. The asset quality has largely remained stable for the company. So gross NPA below 0.9% will be positive. Last quarter, it was at 0.77%. Now, we need to know how other housing finance companies have warned over the affordable housing segment supply side constraint, how that impacts or what's the view of management over there will be seen closely. Cost of funds for HFCs have increased while liquidity has tightened, so that view will be seen very closely. Our polls suggest NII growth of 30.5% while net profit to grow at 26.5%. Back to you.
Okay, all right, Abhishek. Thanks very much for that. We need to take a break now, but up next, National Company Law Appellate Tribunal. And onto the stressed asset space now. The National Company Law Appellate Tribunal has cleared the way for the second round of bidding for Bhushan Power's assets. The tribunal has given Tata Steel, JSW Steel and Liberty House till the 6th of August to submit revised bids. Ritu Singh, who's been tracking this story, is here with the details. Ritu, over to you.
After forbidding the Committee of Creditors from taking a decision on the bids for Bhushan Power, the National Company Law Appellate Tribunal ruled that all the three players, that is JSW Steel, Tata Steel as well as Liberty House, will be allowed to submit final bids for Bhushan Power by the 6th of August, that is on Monday, and only after that will the Committee of Creditors consider the final decision when it comes to declaring the winner for Bhushan Power. That too should be delivered to the court according to the ruling in a sealed envelope, and the NCLAT will take it forward from there on. We understand from our banking sources that the final offer that was made by JSW Steel as of Tuesday was about 18,000 crore rupees repayment to the lenders, which is 1,000 crores higher than the 17,000 crores hired by Tata Steel. And Liberty House's offer currently stands at 18,500 crore rupees. So it remains to be seen whether or not any of the other players, or even JSW for that matter, will revise their offers, when it comes to Bhushan Power. And it's only after Monday will the COC consider what they have to pay.
Well, thanks so much for that, Ritu. Well, in fact, if Tata Steel just drops out of that bid, I think the street will take that very, very positively. There was a note that came in as well yesterday, I think from JP Morgan. They were suggesting that if Tata Steel pulls out of this bid for Bhushan Power, then all those fears about that higher debt in their books will go away, and there could be a temporary spurt on Tata Steel as well. So we'll wait by August 6th is the deadline, as Ritu told us. But sticking with the Tatas then, Tata Motors Q1 earnings were well below the street estimates. The company saw its worst loss in nearly 9 years. CNBC TV18's Utkarsh Chaturvedi caught up with Girish Wagh, the head of commercial vehicle business unit at Tata Motors. He began by asking him about the company's Q1 performance and also the impact of the new axle load regulations. Let's listen in.
Yes, I think Q1 has been very satisfactory for us. We've grown the volumes by 71%, which is more than the industry. So we grew our market share by more than 5%. We've also done very well on EBITDA, as you said, so 11.7% of EBITDA. We've done very well on EBIT, we have done very well on PBT. So all the margins have swung significantly. So it was a very good quarter for us. I think going ahead, we will continue to work with the same passion. There are a few hiccups, if I may say so. So, for example, in medium and heavy commercial vehicles, there is a bit of uncertainty due to the new axle load regulation. But I think we will wait for clarity to emerge. But I think we are fully committed to continue on the same path.
So has there been some impact at this point of time due to the uncertainty regarding axle load norms?
Yes, I think there are quite a few customers who are thinking about the decision to purchase the vehicle. So we have seen some kind of slowdown which is happening in actual retail.
By when do you think there will be a clarity coming in from the government, and what are we really looking at?
I think we'll have to wait and watch.
Last question from my side. Do you think that the planning going ahead of the whole truck industry will really depend on the clarity coming in from here?
I think, see, as far as this particular regulation is concerned, we have to re-engineer, revalidate and recertify our vehicles, and we have already started that work. As far as overall regulatory roadmap is concerned, I think we have already said that it's good to have certainty and visibility on this, and if a proper roadmap has been set, I think the auto industry will align with that.
Okay, well, moving on to some national news then. West Bengal Chief Minister and Trinamool Congress Supremo Mamata Banerjee is in the news for her staunch opposition to the NRC, which she feels could lead to a civil war situation in the country. She has now taken her fight against the Assam NRC to Delhi. Mamata met veteran BJP lawmaker Lal Krishna Advani in his chamber inside Parliament building yesterday. She also met Congress President Rahul Gandhi and UPA chairperson Sonia Gandhi. Reiterating that the NRC has the potential to divide people and uproot legitimate Indians from the nation, Mamata Banerjee accused the centre of being dogmatic in its approach.
Our message is very clear. We want to see united India.
As far as the NRC issue is concerned, your party has been raising it tooth and nail in Parliament and outside.
That is absolutely correct. My party is raising the genuine issue because we want that Indian should be protected. Indian should not be ousted because of BJP's political interest.
Well, meanwhile, Minister of State for Home, Kiran Rijiju, slammed the West Bengal Chief Minister in an exclusive conversation with Network 18. He said that it was unbecoming of her to use words like bloodshed. Let's listen in.
In this present case, the kind of statements she is making, the use of terms like civil war, bloodbath, bloodshed, these are very, very unbecoming on the part of a Chief Minister of a state. The primary responsibility of the government, whether Chief Minister or Prime Minister or any organs of the government, is to ensure proper law and order situation in the country or in the state.
Okay, well, let's take a break now. But before that, here's a weather report from SkyMet.
Hi, welcome to Daily SkyMet Weather Report with Fauzia. Light to moderate rain with isolated heavy spells may occur over Uttarakhand and Himachal Pradesh. Meanwhile, Jammu and Kashmir and northern plains, including Delhi NCR, would see isolated rains. Furthermore, moderate to heavy showers are likely over east and central Uttar Pradesh, whereas light to moderate rains are possible over Bihar and Jharkhand. Meanwhile, West Bengal and North Odisha may see isolated heavy rains. Rains will reduce over Uttar Pradesh in the coming days, thus the flood situation would improve. For now, light to moderate showers will lash northeast India with isolated heavy spells. In central region, moderate rain is likely over northeast Madhya Pradesh and North Chhattisgarh. Rains over remaining Chhattisgarh, Vidarbha, Madhya Maharashtra and Konkan and Goa, including Mumbai, would remain light. Finally, light to moderate showers will persist in Kerala and coastal Karnataka with light showers over interior Karnataka and parts of Tamil Nadu. Let's look at the temperatures. Delhi would have a maximum of 35 and minimum 27 degrees Celsius. The maximum temperature in Kolkata would be 32 and minimum temperature 25. Mumbai would observe a maximum of 31 and minimum 27.
We've been talking about the equity markets. Let's shift focus to the commodity markets. And Manisha Gupta joins us as always to tell us what's going on there. Hey Manisha, good morning.
Hi Nigel, morning, and thank you so much for that. Well, it really is about the US trying to or imposing 25% tariffs on 200 billion worth of Chinese goods, and that really seems to have spoiled the sentiment. So not just the industrial metals, where we have seen the copper prices decline almost 4% in the New York session, you have seen that impact pretty much across commodities. Most of the metals have closed New York in the weaker note and have started Asia on a weaker note yet again. The crude oil prices also declined 2% overnight. Apart from the trade tensions, it also has been about increasing supplies. We have been talking about on how the OPEC, Russia, the US production has been increasing. The latest numbers do suggest that there has been an increase in production from countries like Kuwait, UAE also. Also, there has been a buildup in the US weekly inventories by 3.08 million barrels. The markets are looking at increase in inventories, higher imports, lesser exports, demand concerns coming back, and all of that really seems to be weighing onto this space. So August clearly has started on a real weak note for many of these commodities.
Okay, all right, Manisha. Thanks very much for that. Well, let's move on now. Mangalam joins in to give us an update of all the cues from the F&O space. Mangalam.
Well, Ekta, yesterday, the Nifty ended its 4-day gaining streak, was mildly muted in trade off the high point of the day. But the Nifty futures premium, that one expanded from about 15 points to 28 points. That's telling you that there was some purchase at the lower levels. And that is what the data confirmed in the evening as well. The foreign institutional investors bought about 1,200 crores in index futures, almost 11,500 long contracts added, close to around 15,000 short contracts unwound as well. With this, the FII long exposure in index futures, which stood at 58% in the previous trading session, has now jumped upwards of 60%, currently standing at 61% itself, a number that I haven't seen at least in the last 3-4 series itself. In the index option space, there was a net sell figure of 106 crores, but it was, more or less mixed. There was an equal number of long puts as well as short puts added in index options. Important day today, it's Thursday, so watch out for the Nifty Bank weekly options expiry. 28,000 call and 27,800 calls have the maximum open interest. As far as the Nifty is concerned, we're consistently seeing some writing at the 11,000 put, 11,300 put, and yesterday the 11,400 call saw some action too. Individual stocks that we need to keep on our radar, fresh longs seen on IDBI Bank, and yesterday the cabinet gave that nod to IDBI LIC deal, so let's see how that stock pans out in trade today. Some short covering on Mahanagar Gas and Ashok Leyland after strong auto sales numbers and good results, and a lot of shorts added on the likes of Exide, Raymond and Tata Global Beverages after poor results for Tata Global Beverages.
Okay, thanks so much for that, Mangalam. Well, on that note, we'll wrap up on Power Breakfast. We leave you with the picks of our bullseye contestants for day 4 of this week. Power's morning call comes up next.
Our first call is a buy call on MCX for a target of 931, stop loss 858. Second buy would be on Jaicorp for a target of 179, stop loss 149. Third buy would be on West Coast Paper for a target of 324, stop loss 286. And final call would be a buy call on Vijaya Bank for a target of 65.5, stop loss at 58.2.
My first call is a buy call on BEML. The stock closed at 908 rupees yesterday. It could be bought for an intraday target of 930 and a stop loss of 890 should be kept on the stock. My second call would be a buy call on PEL. The stock closed at 2,806 rupees yesterday. It could be bought for an intraday target of 2,850 and a stop loss of 2,780 should be strictly kept on the stock. My third call would be a buy call on Petronet. The stock's closing price was 235. It could be bought for an intraday target of 240 and a stop loss of 230 should be strictly kept on the stock. And my final call would be a buy call on Godfrey Phillips. The stock's closing price was 814 rupees 50 paisa yesterday. It could be bought for an intraday target of 830 and a stop loss of 800 should be strictly kept on the stock.
My first pick is Arvindo Pharma. I buy it with a day target of 620 and a stop loss of 580. Second, Aditya Birla Retail. I buy it with a day target of 165 and a stop loss of 142. Third, Ujjivan Finance. I sell it with a day target of 365 and a stop loss of 380. Fourth, IRB Infra. I continue with yesterday's sell call with a day target of 185 and a stop loss of 210.